This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor on Friday, July 31st, last day of the month. Oh, I'm sure many of you are just praying for when your kids go back to school. My baby is still too young to go to school. I'm sure I'll be looking forward to that drop-off date as well. Just kidding. I love her, especially when she's crying. Let's jump into today's market. I am going to earn my bestseller badge today. So, many will label today as a follow-through day. If you haven't read Weinstein and his books, or have actually went to college for finance and have never heard about this, when markets reverse or potentially bottom, like yesterday on Thursday, you typically will want to see evidence of a follow-through day that happens within 4 to 7 trading days, where there's a big market move to the upside with above average trading volume. And that will mark a capitulation bottom where weak hands liquidate shares and strong hands pick up those shares. That's as easy as I can describe it, right? You can explain that to a kid with Pokemon cards, right? That's as simple as I can describe this to you. So, let's take a look at some of the data. And I'm going to cover breadth a lot today because it's important. I'm going to cover volume a lot because it's important. Taking a quick look at indexes. The SPY had 47 million shares traded versus 52 million shares on daily average. Okay, that's acceptable. That's par. The Qs, 44 million versus 44 million average. Okay, par. SMH, semiconductors, 13 million versus 11 million daily average. Okay, a little bit more. These are not stellar volume numbers for turnaround and follow through day. If you want to see what I'm looking for on the indexes, look at Amazon. Amazon had a great day, percentage-wise. But the tell is the volume. 113 million shares today versus a daily average of 48 million. That's almost 3x. That is what I need to see from the indices to say, yes, that is capitulation and it's a follow-through day. Now, this is only day one after yesterday. It can happen within 7 days. 4 to 7 days is the average, but up to 7 days. Let's keep going. So what's the summary of the day? Do I need to explain this more? Breadth, sector analysis, global macro, and the giant mindless robot by Michael Green is really the market structure. Auction market principles, which is what I teach and practice, is the daily plumbing and trading. We may still have a chance at reversal. Maybe the markets have changed and we just don't need volume anymore. We just need a few names to reverse course. But let's keep peeling this onion here. Breadth. 98 new highs versus 160 new lows. Obviously that's skewed to the bear. 42% advanced versus 54% declined, skewed to the bear. 54% below the 50-day, 50% below the 200-day. It's skewed to the bear only because we've been at like 50% for both below the 50 and below the 200. So there's an expansion of stocks below their 50-day. Now, this is where I'm going to earn my badge. You're going to thank me. Paying subscribers. Profitable companies making new highs on the NASDAQ. Now, before I give you the number, you might be like, why do you harp on this so much?
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.